let's just jump right into it. When I say the words AI giant, your brain probably goes straight to, the flashy hardware makers. You picture cutting edge chips and those massive, warehouse sized data centers. But what if I told you that one of Europe's oldest, most entrenched software companies is quietly transforming itself into an absolute AI powerhouse? And investors? Well, they're paying a massive premium just to own a piece of it. Welcome to The Explainer. Today we're unpacking SAP, the quiet giant that is literally rewriting its own DNA. The contrast here is just fascinating. SAP is not NVIDIA, right? They aren't stamping out GPUs, and they are definitely not building sprawling data centers. Instead, they control something that's arguably just as critical to the global economy, the actual software running global businesses. Because while everyone's obsessing over the hardware side of the AI boom, SAP is quietly but very aggressively embedding AI directly into the day-to-day operations of the world's biggest corporations. We're talking finance, supply chains, HR. SAP is basically injecting artificial intelligence right into the beating heart of the enterprise. So here's our roadmap for this breakdown. We'll start with the AI pivot, then hit the Q2 financials, dive into what I call the ultimate moat, weigh the risks and rewards, and finish up with the final verdict. All right, part one, the AI pivot. You kind of have to forget the old SAP, the static, legacy enterprise software company that just sold you a one-off license and walked away. The new SAP is undergoing a massive, fundamental shift. They're moving toward dynamic, cloud-based subscriptions that lean heavily on data, AI, and what they call the autonomous enterprise. And their vision here is super ambitious. They don't just want to give you a smart chatbot. They want AI agents to execute complex, multi-step business workflows with just a bit of human oversight. Between rolling out the SAP Autonomous Suite and really pushing their AI assistant Joule, they're not just offering a new tool, they are trying to automate the whole workflow. But how do we actually measure if this pivot is working? That brings us to this absolutely crucial metric, cloud backlog. Honestly, if you're an investor or just someone trying to gauge SAP's actual momentum, this is your anchor. Cloud backlog is simply contracted future cloud revenue. It's guaranteed income that's locked in but hasn't officially hit the books yet. When Wall Street tries to figure out if SAP's cloud transition is actually sticky, this is the exact number they obsess over. Which leads us perfectly into part two, the Q2 financials. Let's start with the stuff the bulls absolutely love. In the second quarter, cloud revenue shot up a massive 22%. Their cloud ERP suite up 25%. And there's that magic metric we just talked about, current cloud backlog. That surged by 27% to an eye-watering 22.9 billion euros. Plus, they generated around 3 billion euros in free cash flow in just this one quarter alone. Now, why is that such a big deal? Because while a lot of other AI startups are just burning through mountains of cash, hoping for future growth, SAP already has this highly profitable software franchise. They're generating the cash they need right now to fund their AI ambitions, buy back shares, and even pay out dividends. But hold on a second. It wasn't a totally clean sweep. Wall Street definitely served up a reality check here. Because despite all that incredible cloud growth, SAP actually missed analyst expectations. Reported adjusted earnings per share came in at around $1.82, which missed the $2.03 people were looking for. Revenue hit $11.28 billion, just a bit shy of the $11.44 billion expected. And to top it all off, management actually lowered their full-year operating profit guidance, pointing to a bit of a sequential slowdown. So look, for an expensive tech stock, you can't just wave your hands and say, hey, cloud is growing, buy the stock. The market cares deeply about growth relative to expectations. And right now, that growth just isn't accelerating quite as fast as investors had priced in. Let's move on to part three, the ultimate moat. I want you to picture a massive multinational corporation. Their finance, procurement, supply chain, HR, manufacturing, inventory, all of it is already running on SAP. This right here is their ultimate moat, just incredible depth inside corporate operations. If one of these massive companies wants to adopt AI, they really don't want to rip out their entire software infrastructure and start over from scratch with a new vendor. It's just too risky. So instead, SAP can just layer its AI agents directly onto those existing relationships. It's a phenomenally powerful advantage because the friction for existing customers to adopt SAP's AI is just incredibly low. And the numbers prove this embedded strategy is absolutely crushing it. 90%. That's the takeaway here. In this latest quarter, AI and the SAP Business Data Cloud were included in more than 90% of the company's 50 largest deals. They don't need to go out and build the world's absolute best, biggest foundational AI model. They don't. They just need to monetize AI through the enterprise software and workflow automation that these businesses are already locked into. All right, part 4, risks and rewards. Looking at the rewards side, SAP actually maintains a really healthy financial profile. They have a 40.2% dividend payout ratio, which means they're distributing roughly 2.88 billion euros back to shareholders. Now, that's great and all, but let's be real for a second. At current prices, that dividend yield is only around 1%. So you are definitely not buying SAP for the income. You're buying it for the growth story, the cloud transition, and that massive AI upside. But of course, with that massive growth thesis comes some pretty significant risks. The analysis points out 6 major ones we need to keep on our radar. Number 1 is growth deceleration. Honestly, if that cloud growth starts to stall, look out below. Number 2, AI disruption. There's a real fear that AI could eventually make human workers so efficient that companies just don't need to buy as many traditional software seats. Number 3 is a big one, valuation. SAP is trading at a premium 24.1 times forward PE ratio. That high multiple means there is a dangerous amount downside if they disappoint Wall Street. Then you've got currency risks, intense competition from heavyweights like Microsoft and Oracle who are throwing billions at AI, and finally, migration execution. Their customers still have to actually pull off the transition from those old clunky SAP systems to these new cloud platforms without everything breaking. Which brings us to our final section, the final verdict. If we break down the fundamental health of the business based on the source analysis, SAP earns top-tier 5-star marks across the board for its enterprise franchise, cloud growth, AI opportunity, recurring revenue, and cash generation. Just stellar stuff. Their competitive position takes a slight dip to a solid 4 stars, but where it really takes a hit is in dividend, valuation, and execution risk, which all sit at 3 stars. Basically, the stock isn't cheap, and the transition is tricky. But when you roll it all up, this incredible franchise still walks away with a highly impressive 8.8 out of 10 overall score. So, based on all of that rigorous analysis, the final verdict here is buy on pullback or hold. What does that actually mean for you? Well, if you're a long-term believer that enterprise cloud and AI spending is just going to keep exploding, you want to buy when the stock has a temporary dip. You definitely don't want to chase a massive rally at these valuations. And if you already own it, the move is to just hold your shares, provided that cloud backlog, the margins, and the free cash flow stay as strong as what we're seeing right now. And that leaves us with this final thought to chew on. SAP is just not that boring legacy software company anymore. They are actively transforming into an AI-powered operating system for global business. The sheer scale of the opportunity is staggering. They've got the moat, they've got the cash. But here is the ultimate takeaway. With such a premium valuation already baked into the stock price, their margin for error is basically zero. The question isn't whether their AI vision is brilliant. It is. The real question is whether they can flawlessly execute this monumental pivot without tripping over their own feet. Can they pull it off? Keep your eyes glued to that cloud backlog, because I guarantee you that's exactly where you'll find your answer. Thanks for joining me on this explainer, and we'll see you next time.